Hello, how are you doing today? This is Professor Ramkrishna and welcome to my YouTube channel Archiversity. Through this YouTube channel and also with my YouTube website, that is archiversity.com, and online portals like educational portals like Udemy, then Teachable, Coursera, I teach courses on finance, accounting, statistics, all quantitative subjects of a business management. In this lecture, as a part of my introduction to financial accounting, I'm going to explain about sources of documents. In the sense, in accounting, whenever you have to record a transaction into your books of records or books of original entry, that should be from a document. In the sense, there should be a source document. So the source documents may be of a physical documents or a paper kind of a documents, or source documents may also be a digital documents or digital instruments. So in this lecture, I'll introduce you to both the paper-based source documents as well as a new age, there is a digital age documents also. So please stay with me, and I'll take you to my OneNote, where I have examples of source documents, and using that I will explain clearly about the accounting source documents. Here are the different source documents. There are multiples of source documents available. However, due to time constraint or just as a brief introductory, I am going to explain you about these 11 important source documents. So we'll start with the receipt. Now, receipt is one very commonly seen source document in accounting. Assuming that you are a college student and you paid a fee in your college, so your college clerk will issue a receipt saying that the amount of rupees received from you. So there is a receipt. Or if you are taking a participation into a tournament and on behalf of your team you paid a tournament participation fees, then also you get a receipt. Similarly, when you go to a supermarket or a store where you would like to buy groceries, then also they'll give you a receipt. So these are the basic examples of receipts, and here we can see that now your receipt appears something like this. So here you may have your college name or organization, and receipt number will be there, the date will be written here, and they'll write your name so and so and the amount received from, and in the form. So this is one example of a receipt, of a paper based receipt. But now in a digital age, you can see that the receipts are of a different. Now let us say you go to a supermarket, and when you buy a product, so they use the barcodes for making payments, or when you are making a payment, they use your photocopies or scan. So all these act as receipts for the business entity. This is one. And next is the invoice. So invoice is slightly different from your receipt, whereas in case of an invoice, you have a description for the product and the quantity and number of units produced, the price per quantity and the total. And invoice also have details related to the tax amount, etc. So here let us see an example of an invoice. So here is an tax invoice, original copy. Here the date will be there, and order number, tax invoice number, and from whom and from to, that is the seller and buyer, and the GST number of the seller. Then the quantity, let us say you purchased one computer, so description is a computer and how much it is going to cost. Let us say this is going to cost 20,000 and GST is 10% on this, so 2,000, total is 22,000. Similarly, there is, you also buy one what you call as a printer. So and it costs you, let us say 10,000 rupees, and GST is a 10%, 1,000. So total amount is 11,000. And you will have a subtotal and GST of a total and total amount including. So this is the final amount that you are going to pay and issue. So this is another example of a source document, that is an invoice. Next is the checks. When in a business you may receive check from a bank or from your customer, from any bank like So the customer may issue HDFC bank check or SBI bank check likewise. On the other side, you as an enterprise, that is a owner of the business or accountant of the business, you will also issue checks from current account of your business entity. This is one another example. So you have a then you have a deposit slips. When you are depositing money into a bank, like you will have a deposit slip, so that will give you how much of amount is deposited into your bank. This is another source document which actually shows you the amounts deposited in different banks and or the checks deposited into different banks and all that. Then you have a payment voucher. This is another document. So here is an example of a payment voucher. So payment voucher number, date, how much of amount is paid, and in rupees paid to whom, and then on account of for what purpose this amount is paid. Let us say you paid sum of rupees 5,000, and in words you'll write like a 5,000 and paid to, let us say, your owner. You can give a name. Let us say owner is your Raju, on account of rent paid to him. So who is preparing? The clerk who prepares will sign here, and received by the owner will sign here. So this is an example of a payment voucher. We keep this as a track to record our expenses paid, that is a rent amount paid. Then you will have a debit note and you have a credit note. So here is a clear example or explanation on a debit note and credit note. Now when we are talking about a debit note is issued as evidence to reflect that the debt is made to the seller's account. In the sense, normally why is that we use a debit note is, so in case of a purchase returns of a goods, we use a debit note. Suppose you purchased goods worth rupees 25,000 from X, and from this you returned 5,000 rupees of goods. Then what is that you do is you will create a debit note, all right, for rupees 5,000, indicating that this 5,000 of a goods worth is returned. So debit notes are issued in case of a returns, that is a purchase returns, or if there is any discrepancies in a billing. Let us say you agreed to buy the product for rupees 1,000, but your the invoice or the bill sent by the seller is rupees 1,100. So in such case also you can create a debit note informing to the seller that the bill is in excess of a rupees 100. In all these situations we use the debit note. On the other side, the credit note is used in the context of a sales returns. So debit note is for purchase returns or any transactions related to the purchase, whereas a credit note is related to the sales. So suppose you made a sale of a rupees 50,000 and your customer returned goods worth of a rupees 5,000. So then what is that we do is we create a credit note saying that this 5,000 rupees is to be paid to the customer, or we make an adjustment in the next sale, whatever the adjustment may be. So what is that we do here is we create a credit note. So here your credit note relates to the sales returns of a goods and issued by the buyer or a purchaser when you are making a purchase and you are returning. Then we use a debit note. Then if you are selling, then you are issuing a credit note. So how is that it is going to affect your accounting is, when you are making a purchase returns, so your expenses will decrease, so this will give a positive amount. When you are receiving returns or any adjustment in your sales, then this will decrease, your income will decrease, so this is a negative amount. So now I'll show you how will be the debit note and the credit note. So here is a debit note. Now Gujarat Freight Tools, this is a simple example. So here our company name and all. So here is the supplier and what is that we returned, and here is the total amount. So this is a classic example of your debit note. Similar to debit note, you will also have a credit note. So credit note is related to your sales transactions. Debit note is related to your purchase related transactions, whether it may be a discount, whether it may be a amount over amount, or it may be return of a goods, all these things. So clear idea is that debit note is related to your purchase related activities or transactions, whereas a credit note is related to your sales related activities or transactions. Then you have a statement of account. So statement of account, this you get from your bank, because when you are depositing your money in your account, you will make a cash book, and when it is there in bank will create a passbook. So you will get a statement from the bank and you will try to compare the transactions between these two. We call this as a bank reconciliation. And another amount is similar, is the bank statement. Then you have a loan statement also. Suppose you borrowed a loan from a bank or financial institution. So it will give you a schedule or a statement where it indicates the principal amount paid as well as the interest amount. So it shows you a segregation of a principal and interest amount, so that you will be knowing how much of interest amount is paid and how much of a principal amount is paid. That you will get from your loan statements. Then sometimes businesses will have a credit cards given by the banks based on your financial performance. So these statements will also, in the sense credit card statements, will also help you to understand the expenditure spent on different sources using the cards. So these are a few of the examples of source documents that accounting will use to record the transactions. There are multiple other documents are also there. Just to have an idea, I introduced these 11 different source documents to you, and among these important are your invoice and receipts, then your debit note and credit note. So pay attention towards these. Okay, this is the lecture on different source documents that the accounting use to record the transactions in books of original entry. Thank you for watching the lecture. In my next lecture, I am going to explain you how to generalize the transactions in books of original entry, whether it is a general journal or your other books of original entry.